Yeah, what's up, everybody? Welcome to the official Trade Talk channel where I show you how I analyze price for the most higher probable entries to help you guys become better traders. Lots going on. SEC suing Binance, Coinbase, Kraken, literally everybody that they can get their hands on. And that's literally made us break down below the 2-week support level that we were watching. We were taking positions at, and we were assuming eventually we were going to see a breakout. Unfortunately, that did not happen. This is that 2-week support zone. I will show you here on the 2-week time frame, and then we'll go into the lawsuit a little bit. Right there, boom, down. You've taken out all the swing lows since we've been trading in this range. So this range has been resolved to the downside. Now, will this be a bear trap? Probably not. I mean, this is huge news. Basically, Binance is the biggest exchange in the world. So, yeah, I mean, literally, I don't see how they can sue an offshore exchange, but I'm sure they're going to figure out a way to do so. They literally told Binance to seize or freeze U.S. citizens' funds. Think about that for a second. They are telling Binance to freeze your funds. So if you have funds over there, they might get frozen. I mean, it's crazy. Yeah. So my question to everybody in the whole entire world is, can Bitcoin rally if the United States of America is not allowed to partake in this trading endeavor? Right? They're literally trying to make it illegal for U.S. People to basically trade or own or do anything with cryptocurrencies. Let me pull up this right here. This is from CNN. Federal regulators have sued Binance, the world's largest. That's probably not correct. The lawsuit has not happened yet, as far as I know. The world's largest crypto exchange, accusing company of running an illegal exchange in the United States and compiling billions of dollars worth of customers' funds. The Securities and Exchange Commission, Wall Street's primary regulator, alleges the company acted in blatant disregard of U.S. securities laws. It also named Binance CEO CZ as a defendant. Through 13 charges, we allege that Zhao and Binance entities engaged in extensive web of deception, conflicts of interest, lacks of disclosure, and calculated evasion of the law, said Gary Gensler. The SEC also alleges that Zhao and Binance commingled customer assets and even diverted some to an entity controlled by Zhao. The complaint further alleges that Zhao and Binance knew they were violating U.S. laws because of that stupid tweet that guy that worked for Binance put out a long time ago. Binance's CCO bluntly admitted to another Binance compliance officer in December 2018, "We are operating as a fucking unlicensed security exchange in the USA, bro." The complainant reads, referring to the company's chief compliance officer. A spokesperson for Binance said the company takes the SEC's allegations seriously, but it believes the agency's accusations are unjustified. We respectfully disagree. Blah, 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 blah. Now, what does that mean for us? Well, if you hold any crypto assets on the platform, and if you are a U.S. citizen, like I said earlier, your funds could be seized or frozen. Basically, that did put a nice big down day on Bitcoin yesterday. Obviously, we were looking for support to hold here. It looked like we might have seen it hold, and that news dropped, and boom, massive down candle. That is a legit breakdown. Is this going to be a bear trap? Like I said, I doubt it, because Coinbase news just broke today, thanks to Ray for hooking us up. Let me just pull this over here so you can see real quick. Let's see here, right there. So both of these, SEC Coinbase has never been registered as a broker, national securities exchange, or clearing agency, evading the disclosure scheme for security markets. That comes from Walter Bloomberg. And then he also said the SEC says Coinbase has operated as an unregistered broker at least since 2019. Now, with that being said, where do we go from here? Well, like I said, I said this at the beginning of the year. Bitcoin would more than likely trade sideways to slightly up for, all of 2023 because of past data. We can go into the BLX index real quick and we can see, let's go to the monthly here. You can see that basically, well, let's go to the yearly. Screw it. You can see basically every time that you do have a bear market, it lasts for, a couple years. So down candle, this didn't go anywhere. And then 2017's rally, same thing. You had a bear market year. And then the next year was pretty much sideways, trading inside of that yearly range. This candle did not trade inside of the yearly range. But ultimately, on the fourth year or whatever, boom, you break out. Same here, boom, you break out. So we wouldn't even be looking for Bitcoin to break out to the upside and make fresh all-time highs until 2024 when the halving happens. But I would go ahead and say that it'll probably be later than that. It'll probably be November, and that's only how the election goes. If we keep the same people, you know what I mean, then we can look for the exact same thing to continue. They are absolutely trying to smash cryptocurrency because they look at it as a competitor to the CBDCs. Now, there are people that are going to run for the election that basically says that they will do their very best to make it not happen. And, there are some people in the U.S., politicians that do like and own Bitcoin. So hopefully we get some people like that in the election, right? And then that can help Bitcoin rally. But until that, as long as we still have Joe Biden and his administration in office, this is what we're going to see probably. But anyways, just as far as technical analysis goes, that's why my prediction when we did say that we were looking for a bear market, we got that. Once we put in what we assumed would be the lows, we were looking for 2023 to trade inside of 2022's range, as that's how it has done its entire life. Now, obviously, past performance is not indicative of future results. We know that. But with the halving and everything and the way Bitcoin is coded, it is literally programmed to go up every 4 years as supply gets cut. All right, so technical analysis. Technical analysis will not work when there are news plays going on, when you have, lots of volatility based on news, right? Technical analysis will not work. You can see big moves to the upside, big moves to the downside. You can see here on the 15-minute chart where the volatility kicked in right here around 8 o'clock. That's when the news broke of the SEC. The SEC gave Coinbase a Wells notice, a month, 2 months ago. But they outright came out and said this morning that they were going to look to be suing Coinbase as well. And I'm sure there will be another alert tomorrow or the next day saying that they are going to sue Kraken as well. And I mean, just expect it. Gary Gensler is supposed to be speaking today on Bloomberg on the network at 10:30. So at 10:30, you could see some volatility take place on this asset. Don't think that the low is in. On this candle right here, you pushed in, you made a fresh daily low, okay? You also took out yesterday's low. This is typically where you would be looking, for an entry if you were thinking that there was going to be any sign of bullishness today. What I think will probably occur is now that the market is open, price will probably run up above this swing high right there. And then at 10:30, Gary Gensler will begin speaking, and then Bitcoin will probably dump again. All right. So be very, very careful, guys. If you've been following me, you know how to do this, right? I mean, obviously, if you're on Binance, if you're on that exchange, my heart goes out to you. If it was me, if I was on the exchange, I would immediately be trying to retrieve my funds and get them into cold storage until all this stuff blows away. That is if you are a firm believer in Bitcoin. If you are not a firm believer in Bitcoin and you are like me, you're just a trader. Well, I am a firm believer in Bitcoin overall and for the long run. However, I like Bitcoin more as a trader because it's more volatile. It has bigger moves in the day, right? Like sometimes we see 4 and 5% days, whereas the S&P 500 closes at like 0.4%. So like hardly moves, right? So that's why I was attracted to Bitcoin, was because of the volatility. Now, even though I am long from down here, I also opened a short position when we pushed up into this white line. Why that white line? That white line is 2-week resistance. We've already been discussing this because we're 6 weeks now, or 4 weeks right there. 1, 2, 4, 6 weeks since that resistance was put in. So on a retest of that, you can see here on the hourly, boop, that was where I entered a short position. I wasn't quite looking to get short here because I thought maybe there would have been an opportunity for it to break out. But obviously that's set in a trend line that you can see here like so. So the near-term trend is down, right? Anytime you're on the daily time frame, you want to know, there you go. So we were trying to break back above the 21 exponential and hold it. Then we broke back down below it, but then we were trying to get back up it again, and then the news broke. So I mean, that's where we stand. So I would probably expect, even if price was to trade all the way back up to 26,752, if you can't close a 2-week candle back above that, then you're going to be looking for a sell entry roughly in that region. And that can be any time in June, as we don't know what's going to happen. But I mean, you can see that you have swing high after swing high, right? Lower highs, lower lows. You just made a fresh lower low yesterday and then another fresh lower low today. So be very careful if you are trading the asset. Now, this short position that I put on up here is not making a whole lot of money, even though this move was big, because I've taken profits off of it, right? So the size of the position was big, and now it is not. So yeah, it is still obviously adding profits to the P&L, but it's at a point where it's not doing much. So what I'm probably going to do is I'm probably going to close that position and look for another entry to the downside, unfortunately. There are some people calling this the biggest bear trap I've ever seen on Twitter. Don't believe those people. This is serious, guys. This is serious. The reason is because you need a means of exchange for money to be money, okay? You need it. It has to happen. If you do not have a means of exchange, then the money isn't money. It's something else. If the United States of America investors, money managers, banking, investment bankers, stuff like that, if they cannot participate legally in this asset for their clients, they will not. They will either do it through the CME, which is settled in dollars, or do it via a stock, either Riot, Mara, or whatever, right? GBTC, any of those things. But those funds are settled in fiat. So, I mean, if that was the case, just keep trading Forex and stocks. That's probably what I would say at this point. If you're an American, if you're not an American, then you're still legally allowed to trade the asset. Trade it, right? Trade it. There is a link in the description if you want an exchange for everybody except the United States of American citizens can use. So there you go. Anyways, moving on. I'm just holding a short position. Like I said, he's going to be speaking at 10:30 on Bloomberg. So I would expect at 10:30 you might see some volatility. Now let's move on. I was looking at the Euro USD potentially reversing based on some COT data that is right here, because we have the widest spread for dealer and intermediaries and asset managers in green. So asset managers are long this asset. All right. This is the Euro future. So They're long, and they're as long as they have ever been on the Euro futures. But this takes time, right? It's not something that's going to play out in a span of a 1 hour candle. It could take months for it to play out. So I am ultimately looking for this to turn around potentially, but as long as we're trading under the 21 on the daily, and if we break down and close, a weekly under this 2023 open, then I will probably be looking for shorts. And that's just the way it is. Yesterday, we had a nice trade on it based on the news that came out yesterday. Both news aspects were bearish for the dollar, so we did see a nice uptick. On the push up, obviously, I took profits when I stopped to break even, and I was stopped out of that position right there. All right, but the money was made. That's all that matters to me. It is, sometimes it's hard to catch trends, sometimes it's not, right? So we'll see if we do eventually are able to catch a trend reversal. The asset, and since it's been basically a futures contract, or let me put it this way, since COT data has been able to print on this, it's been in a downtrend, right? So it's been in a downtrend, even though those guys were long back in here, 2017, 2019. You can see you did get a little up pop, but basically the whole way down for a very long time, this was a very sideways to down garbage. No volatility in any of that. They were still building a long position. So is it possible that we find support and then see it go? It is. It is. But the dealers are short. I'm just saying the spread right there is huge. It's basically massive. So we're going to see a trend on it pretty soon. Whether it goes to the upside or downside, I do not know, but we will be able to get into a position eventually, whether it is a short or a long, and we will catch the trend. That is going to be the thing that I am trying to do for people that follow me. We're going to try to catch the trend. I'm currently holding a long position in CAD Swiss. This already took position on this. This is in a downtrend, obviously. So I am expecting that move to pretty much be done. As you can see right there is the weekly 21. Is it possible that it breaks out? Of course it is. Right there is the yearly open. So you've made lower highs and lower lows all year. So a retest of the yearly open would, in my opinion, just be a run above this swing high. And then you would probably see a drop. Maybe if the trend is going to continue in that direction. We can pull up some currency futures and look at all of them by themselves. You can see the Swiss franc is weak, or it has been weak for the last couple weeks, as it has been pulling back, but it is exactly opposite of the CAD Swiss trade. So me being long Canadian dollar Swiss franc means either I am long Canadian dollar or I am short Swiss franc. Okay? So if the Swissy finds support here, which it does indeed look like it is trying to do, right there is going to be weekly support. Let's get rid of that. So if we do close above this area this week, then next week I will be watching for retests of this price for longs on Swiss franc. And I will try to do that against the weakest pair that week, right? Because if you're going to get long Swissy CAD or CAD Swissy or USD Swiss or whatever that's paired against the Swiss, you need it to be weaker. If I pull up FinViz right here, you can see, let me refresh. Currently, right now, the strongest asset in the Forex world is the Aussie dollar. We were looking for a short on euro yen. That short it did give us an entry. I haven't looked at it since because I've been busy getting everything else situated, but let's just go see where that's currently at now. Looks like it's at the exact same spot. And it is. So this is where we were looking for potential entries. And boom, there you go. Is the short over now? No, it's not. Maybe the next hour it drops back under this 149 spot 259. This could have been a stop run, but it doesn't look like it. right? It doesn't look like it. So we'll see. Got a nice strong hourly close above that area. So yeah, looks like it's trying to go higher, but eventually I do see it rolling back over as the euro is weak right now. And the only thing that's going, so like it literally doesn't make sense for it to be going up. The euro is weaker than the yen. The yen is weak, but the euro is weaker. So it should be going down, not up. It should be going down. So it'll probably find resistance eventually somewhere today. Just keep an eye on it. Right now, as of now, your current resistance is going to be this hourly candle. So keep an eye on it. If you drop back under it, there might be an opportunity there for the short position, right? And then that would be the area that you would use to basically manage your risk buy. So you see how that happened, like early before 9 o'clock, you had a move that looked like it was going to roll over. This is a 30-minute resistance because we didn't have a resistance level to look intraday on the hourly. So I dropped down to the 30-minute time frame, found this, and then Michelle, she's in the Discord. She basically said, hey, this is a weekly resistance from a long, long time ago. And she is referring to this area here. So she is correct. But it's an old level. Nonetheless, we would expect it to roll over since the euro is weaker than the yen. Right? So, maybe I'm reading that wrong. The Japanese yen is stronger than the euro, then that's why you're seeing an uptick, potentially. But if the euro is the weakest, then the euro is the base currency. This should be rolling over. This should be rolling over, and it probably will. Just keep your eyes peeled on it. I do like it. As far as trend-wise, obviously it's been in an uptrend for a long time and still considered an uptrend. So if you're trading it to the downside, you're literally trading it, expecting it to be just a pullback. There's daily support at 148.936, and then last week's low would be the next level that I would expect tagged, and that would be 148.594. That's trading inside of last week's range, so it is a potential trade, right? Here's daily res or support right there. That's why you're bouncing from it. Here, daily support. And you are still currently above the 21. So this is like one of those trades, like you're taking the trade in advance, expecting something, like expecting it to break down and close below. It's not the best setup in the world. I'll give you that. It does look like it is running out of steam. It has put in a high, a lower high there, and now another lower high, but this could just been a pullback, and this could be a smaller pullback inside of this move here. It's unlikely. It does look like it's losing steam, definitely losing momentum. I mean, you can clearly see that, but nevertheless, that was the one play that we were watching for a short. I haven't taken it yet because, like I said, I'm not loving it. But I'm going to keep my eyes on it for today. The DXY is strong. The Aussie dollar is the strongest on the day. I don't know why the Australian dollar has been so strong for the last few days, but it has. It has been rocking and rolling. It's probably because they did a rate hike or something like that, more than likely. Aussie dollars usually trades as a risk on asset. The fact that the markets are moving higher could imply a little bit of strength for that as well. But ultimately, the dollar is still pushing higher. So it's running out of steam. It looks like it is. But today, it's right back up into resistance, actually trading above resistance. We took out yesterday's low. So, I mean, it looks like it wants to go higher. Will it fail here? It's possible. but it's just in a spot where I can't really, it looks like it's looking for upside continuation. I mean, look at that, right? Last week was your pullback. This week you're trading above resistance. So it looks like it's looking for upside continuation. However, on Tuesday, it is Tuesday, we could be putting in a weekly high also. So there is a chance that this is just a bull trap, but we'll have to see how it closes today. If it closes up and strong, then we're not going to be looking at it as a bull trap. And obviously a strong dollar. I mean, when you had weak dollar, you still had Bitcoin falling. And that was very, important for me because Bitcoin is traded against the dollar, right? If you're going to have a weak dollar, you should see Bitcoin at least see some kind of strength. And it literally couldn't do that. And that was before the news. So I think Bitcoin was on a journey here, and the SEC has just put its thumb on the button to squash its momentum. And it's doing a good job of that, as you can see, right? It's heading lower. So would I be a buyer on it? Nope, not yet. Not until it finds support. So let's see what happens after today, after Gary Gensler speaks. I don't have access to that, or I would play it for you. I don't have the Bloomberg Network channel on my TV, so I don't know where you would even get it. But if you got it, keep your eyes open for that. That will probably cause Bitcoin to roll back over. So, yeah. You're already getting a nice big pump up. But don't be fooled by this, please. Like I said, well, it's gotten well over that swing high at this point. The reason that you're seeing that spike is because that's where the sellers were. See this red line here? They were selling that. So you're literally stopping out all the leverage shorts from here. Right? Now, after 10:30, 11 o'clock, if Bitcoin is still going up, then maybe we have something, right? But it's unlikely. A retest of this price up here would be a potential short opportunity. 26,752 is that price. Daily support is currently 25,741, spot 50. Any questions? Good day from Thailand. Suit against Coinbase just announced short period ago. Yep. Same deal as Binance. Yep. Not accusing Coinbase of compiling funds, though. Yep, I got it. Given how big the Coinbase news is, I'm surprised Bitcoin ain't down more. Like I said, Garrett Gensler is speaking at 10:30. That is probably why you're getting this spike ahead of that, right? They're liquidating the shorts now. And then you'll probably see, this stay roughly trading in this area. Gary Ginsberg, as soon as he opens his mouth, I would not be surprised to see a dump. I literally would not, right? Literally would not. So yeah, I don't know if we'll be alive at 10:30. What time? How long have we been live? 30 minutes. I want to try to keep these live streams under, or at least around an hour, not over. All right, here we go. There's what your overall market looks like. This is all the indices. This is the S&P 500, S&P 100, Dow Jones, Russell 2000, and NASDAQ 100. So it's kind of a mixed marketplace out there today. All right, but I do see more green than red, but we'll see how that plays out. A lot of your tech companies, guys, have been flying to the moon, so they need to pull back. That's why you're seeing them red today. If you just look at the US 100, let me get rid of this. Let me get rid of that. Let me get the daily up. You can see it is overbought. It's been overbought for a while. That's not the daily. It's been overbought for a while. All right, so a pullback is coming. It is coming. Where will it go to? I don't know, right? I don't know. Let's see if we don't have any weekly supports. No 2 weekly supports. 3-day, yeah, you got 2. One there, one down here. So you could pull back to 14-ish, 14,258-ish, 245, whatever. Or you could pull back to 13,853. And then right around there. So something like this. Now you do have an old resistance level over here. So that could also be an area of a pullback too. But I do expect the market to continue to do what it's been doing, and it's been going up, right? The bears have been wrong. They've been wrong all freaking year. Will they be right in the next couple months? Maybe, right? Maybe. A lot of refinancing happened and stuff like that this year when the rates were going up. There is people still buying houses, so people that their mortgages were like $1,500-$1,600 a year ago, they're probably now around $2,500-$2,600. So yeah, there will probably be defaults. If we do start to see a massive credit default, then yep, you'll probably see another bear market. But as of right now, I mean, it's you don't look at past data. You look at new data, 2023 and beyond. We don't care about this right here. None of that. All of that trading has already been done. It's done. It's done. It's over. So a lot of hype, a lot of speculation on AI. So not a lot of other market participants were going up with it. But if we do see the sectors, all the sectors start to be green, then you will have a nice bull market rally on a lot of things. Let's go look at TWO, which is take 2. We had a short position on that via puts. It's just not working out for us right now. I do not understand this garbage. Obviously, resistance has been holding. Yesterday or the day before yesterday, last time I was live, basically it was saying trading into resistance here. You could look for short entries. That could have played out for you if you're trading shares or if you would have bought a 138 put. But we bought it out in the money put, and we did it with a 3-week span for the expiration. So you can see how this has been playing out. It has literally been trading sideways. That is crushing the premium on the puts. So now, just to make money on that 135 put, you would probably need to get down to 132 or 131. And why did I take the short? It was simple. It was a big, huge gap up on bad earnings. And I took the put inside of this day's range. And you can see there's the low at 134.81. There's the high, 141.94. So since this day, that's the day we took the trade. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days. This thing has been trading inside of Thursday, May the 18th candle, which is weird, to say the least. Buying premium it's tough to make money if you buy out of the money premium. You want to do it at the money, and you want to do it. We did it right when we took the entry. Let me pull it up over there. When we took the entry, the implied volatility was low. I mean, it was high, but on the expiration that we took it, it was low. It was under 50%. So you don't ever want to buy options if the implied volatility is above 50%. Because if it trades sideways like that, that will crush implied volatility. There's also a time factor involved, theta. So the longer it trades sideways, the less and less those things become. So Friday, June 9, there's literally 3 days left. So if this thing doesn't drop, and I mean soon, those puts are going to expire worthless. And that's just trading, guys. Unfortunately, that's just the way it works. You nail some and you don't. Yeah, at right now those puts are trading for 51 cents. We bought them for $1.85. So most of the value's gone. If it was to get one strike in the money today, it would maybe be close to break even. But it would have to get to 134 today for that to happen. And the way it's been trading, it's unlikely. What's going to happen is one day after this expiration day, you're going to have a candle that drops all the way down to 126. One day after expiration. I'm joking. I don't know if that's going to happen, but yeah, sorry about that. Gary already spoke on CNBC this morning. That's probably why. It didn't seem to create much in the way of volatility. Maybe another crypto bank absorbed by JP Morgan. Maybe. Good morning, people. Yeah, but about that, Tom, I mean, even if JP Morgan does absorb the crypto bank, it doesn't mean that he's going to be crypto friendly. I don't know if he is or not. I've never researched that. But it really doesn't matter. If the chairman of the SEC is making it or trying to make it illegal for U.S. citizens to buy and sell cryptocurrencies, then what's the point of owning it? My goal is to make money. When I enter a position, you know what I mean? That is the goal, to trade profitably. So he's really throwing a wrench in that because I love trading Bitcoin. Like I said, it's volatile. Today, not so volatile. It's trading at 0.5%. But that's normal after a big day like this. Like tomorrow, in fact, I wouldn't doubt it if you see another small range day. And then the next day, see it drop back out. But clearly the momentum's to the downside. On this day here, we broke back above. So we should have, right here on this day, this should have been where we found traction, right? And then when this day happened, I was like, okay, maybe that it was just one more good stop run. And then this day happened and I was happy. I was like, yeah, maybe it's gonna find it. And then we can look for a retest of that 2-week resistance and then hopefully a breakout. Well, that did not happen. And in fact, if you look at the line chart, because that was literally the only thing that we had as far as bullishness, like it's broke back down, right? There, boom. There was your breakout. Boom, you broke back down. That's not what we want to see, right? Not what we want to see. So you're trending lower. It's no longer looking like a bull flag. It's looking like a topping formation. Hence the short position I took when we were into resistance. So, according to the exchange, that position would be up 405% from when I took the entry. So yeah. Yep. Is this a bear trap? I mean, it could be, guys. It could be. It's just, it's hard for me to think that it's going to see a big bullish run when the US government is literally trying to destroy it. Let me rephrase that sentence. They're not trying to destroy Bitcoin or cryptocurrencies. They're going after the exchanges. So why would they go after the exchanges? Well, they know they can't do anything to Bitcoin because not one person or one entity is Bitcoin, right? It's literally a bank of computers around the world. They can't stop it. But what they can stop is our ability to sell it. Now, they're not even going to try to stop you from buying it, because there are, like, my local pharmacy has a Bitcoin machine in it where I can go and deposit 50 or $100 and it prints out a little key card with the code on the piece of paper, right? That's my keys for that Bitcoin purchase. But I can't go back to that machine and slip that little piece of paper back in and get money out. You see what I'm saying? So they're not stopping you, and they can't stop you from buying it, but they can damn sure stop you from selling it. They are freezing U.S. citizens' funds. I don't know if Binance is doing that yet. I mean, they might give you a few days or whatever. I don't know. I've never used Binance because we were never really allowed to use Binance, right? The only cryptocurrency companies or exchanges that I've used is the ones that I have legally been allowed to use. So I'm not even sure if KuCoin is even usable in the US anymore. And Bitget just said basically they're not going to take US citizens because of what's going on. So literally it looks to me like they're just trying to stop US people from being able to make money from buying Bitcoin, is what it looks like. So, yeah. I mean, you could go to another country potentially and sell your Bitcoin. I don't know, but yeah. That's a heavy choice for US citizens to make, whether they want to keep it or not, depending on how much you own and all of that, right? That's going to be left up to you. Whether you want to sell half, leave half in, the cold storage and see what happens. But like I said, if you can't sell it, it's useless. If the Bitcoin goes up to $5 billion, right, and you can't legally sell it, then you're going to just be sitting on $5 billion worth of nothing. So we'll see how it plays out in the future. But right now, there's definitely an agenda, and I do not like that agenda. As far as the markets as far as the overall markets go, you're unchanged on the day for the S&P 500. You're unchanged on the day for the NASDAQ. You're unchanged on the day for the Dow. Literally sideways. But all these assets have been flying. Well, not all of them. The Dow has not been flying. The Dow has been stuck in a trading range since all of 2023. You've been trading in a range. That line delineates 2023's open. And typically, you want to see your asset moving to the upside. Year to date gains is what you want. So if you'd have bought it on the open of Tuesday, January the 3rd, you would just now literally be up a little bit, right? You wouldn't even be up 1%. Whereas the NASDAQ year to date is different. Why do I not have a yellow line on the NASDAQ? There's your year to date NASDAQ chart, right? You're up good if you bought that one, but this is based on the tech rally. Just tech. Copper bounced too. Yeah, I was looking at that. Sorry about the bright screen. Let's see, if it's not going to load, I'll pull up Firefox. Where are you at, Firefox? All right. I don't remember exactly where it is here. Maybe tools. Here, I'm looking for commitment of traders. It should be here. There it is, right there. All right, so like if you pull up wheat chart, go out more. It had a big rally. Usually when commodities go up really big, it is a sign of a potential recession. Corn down, soybeans is down. So I mean, we're not seeing a massive rally in some of this stuff. But some you are, right? See, this is just Google. I thought it was my internet, but it is not my internet. It is literally Google because I'm blasting through these charts on Firefox. So, yeah. If commodity prices do start to rise, then we will be a little bit concerned. But we'll be on top of it. Nonetheless, we will be on top of it. Good morning, Gary. Already spoken. Yeah, read that. You can sell into a stable coin. You don't need profits into dollars to pay bills. I can't pay any of my bills that I currently have in Bitcoin. I don't have many bills other than like electric and stuff like that because I don't have any debt. So, like, I pay insurance on my vehicles and things like that, but I can't pay with Bitcoin for any of that stuff. I'm not trying to be a negative Nelly here, right? Obviously, I love Bitcoin and I made quite a bit of money you trading Bitcoin. And I own a lot of Bitcoin currently. I haven't sold any of it yet, but I am seriously thinking about it. The problem is like I have one person in the Discord that told me in privacy that they tried to sell their Bitcoin and the bank that they have in Canada froze the asset. They froze the funds. So basically what they did is they sold their Bitcoin, they took it off cold storage, put it into an exchange, exited the position, all of it, and then deposited it to the bank. And the bank froze that transaction. That's what I'm afraid of. I mean, it hasn't happened yet. I've been able to get out with stable coins with my bank, but I'm in Florida, and Florida has a lax, if you will, a lax position on cryptos and stuff. But if it ultimately becomes law and U.S. citizens are literally not allowed to use any of these exchanges, then, your bank will probably freeze the funds. That's the bad part. The good part is Bitcoin could potentially rally forever and ever, like it was built to do. But there's like a market is a market, right? Regardless of what the code says it's supposed to do, a market is a market. If you don't have buyers, literal buyers, it can't go up. It won't go up, right? It'll just continue to go down. The hodlers, even with the hodlers, like, it's true. You've watched yourself hold positions before and seen price go lower than your entry, right? So I mean, have we reached a spot of hodlers? Like, is where the hodlers, are they what's keeping Bitcoin propped? For instance, is that why we stopped at 17K or whatever it was? Well, I haven't seen anything that suggests that. I mean, I'm subscribed to the on-chain guy, and like, interpreting on-chain data is for as far as I can see, is pretty much the same as interpreting price data. Right? It's subjective. So, I mean, it is what it is. I know one thing, we got a nice rally off of the beginning of the year, but I never expected it to break out this year. I expected it to trade up to 35K, to be honest with you. That's as high as I expected it to go. Right in here this year. And it could still potentially, I mean, right? The United States of America isn't the only people that buy Bitcoin. Obviously, everybody in the world does. So, yeah, I mean, it's hard for me to think that without US investors it could go to like insane heights, but it could still stay above, 14, 15K. But if those hodlers start selling, especially if they're US investors and they literally start selling, then as far as, what we can see on chain, there really isn't any accumulation happening right now. Let me see if it'll pull up here. Yeah, I mean, according to the SOPR, you're still kind of what would be considered an uptrend. You're still bouncing off of the baseline. We know that estimated leverage is going to remain high. I mean, it's going to continue to go up. Let me see here. Open interest. No. Where is the trend score? Literally, I mean, here's your year-to-date Bitcoin price, and you had a little bit of accumulation that went on right there, but these accumulators are now underwater because all of these guys that were accumulating at 27 and higher. We're currently like at 25, 981. So anybody that accumulated over here is underwater. So if they start selling, that's just going to create more downside. But I'm not giving up hope, because this wick, I was expecting it to be liquidated, right? Because that's the lowest wick in all of this chop. It was also a monthly low. It's a big low. It's a big one, a big boy, right? So is there a potential for now it to go higher a little bit? Yeah, I guess. There's not much good news out there. Not much good news at all. It's 10:36, so Gary Gensler is speaking currently on Bloomberg. So wait for a fresh high of day, and then let's see what happens. Let me do something real quick. Let me throw a small amount of money into the account, because right now I'm being very, very, very safe with my funds, if you will. Let's see if we get a fresh daily high and if it rolls over. If so, we'll take that position. All right, I'm locked in, ready to go. On the Bitget platform, high of day 26,096. On the Coinbase platform, high of day 26,117. You don't even have to make a new high of day. So I got it on the 5-minute time frame here. We'll watch it and see if it ends up rolling over. Where ultimately would my take profit be? Well, let's see. I would probably start to scale out roughly around 25,741. All right. Just back down to the range. There's a supply zones at 25,697. But here's the thing. Do we take the position now because it looks like it's failing, or do we wait for a fresh daily high and then take the position? Is there any good news that anybody knows of that came out at 9:30? Webull or Public, which exchange? I mean, I understand what you're saying. Right now we have off ramps. I know that. Right now we do. We currently do. We have to see what happens with these lawsuits first and foremost. Like, you could still get on and off with Coinbase. I'm just saying that it could happen, right? It looks like that's what they're trying to do. Let's see if we have any sellers building up. We don't. It looks like we have buyers. You're always going to have retail buyers. I mean, but retail really isn't enough, really, in my opinion, to prop a market. A lot of volume was thrown down here. Earlier, this was where the point of control was. This white line. That's daily support. See, daily support. So that was where the point of control was. So a lot of people were either buying daily support or selling daily support. It looks like more people were buying it. So this probably stopped those people out. More than likely, they had their stop loss setting at the low of day. And you can see with this wick right here, you penetrated that low. So bye-bye stop losses for anybody that bought at the daily support. Got another 5-minute candle pushing here. Obviously, it's overbought on the 5-minute time frame because you got really oversold right there. Let's see, when was that put in? It was put in at 10 o'clock. And then 10:30 was just a minute ago. But like that was said by Mr. Run Mountains, that he had already spoke on CNBC this morning. So maybe the damage is done. I just don't buy it. That was a big move. That's a breakdown of support. A lot of stocks getting triggered through here because there's literally no freaking volume. And it's just drop. Leverage can be a killer. Let's check it on the 15-minute. Got 2 minutes left on this candle. A close higher would be a higher close. Same with the 30-minute. You would still have a higher close. So I'd probably be more leaning more toward that you might see a fresh daily high. You're not even at the midpoint of yesterday's down move. I mean, you got room to go. Right up here would be the midpoint test of yesterday's move lower. Thank goodness I am Aussie living in Thailand. Yeah, I mean, for the rest of the world, it's good, right? It's good. You're good. Wasn't pot once illegal? China did a big U-turn with BTC. Yeah, plenty of people in the Asian Pacific zone will be buying Bitcoin. Yeah, yeah, it's all politics, man. I try not to get into politics because I don't want to be shadow banned or anything like that, or kind of sort of feel like that's already happening. But anyways, I don't like to get into politics because that's either you're gonna piss off people on one side. A lot of people are very political. A lot of people love the administration that we have now, and a lot of people don't. But what I can say for absolute certainty is the administration that we have now is the administration that is trying to ban crypto in the US. So take that with a grain of salt. It wasn't the administration last time or the one before that, even. I also kind of find it funny that Bitcoin's halving cycles happen during election years. That's pretty funny. I guess what's his name, whoever Satoshi is, had a sense of humor. Let's set the halving roughly around the election. So I think the election, depending on which way it goes, could be bullish for Bitcoin. And that is, of course, if the slimeball politicians keep their positions, because politicians tend to lie about things to get into office. Well, we'll do this, this, and this, and then they get in the office and they don't do any of it. They do the exact opposite. I'm pretty much what you would call a centerist. I don't mind, just leave me alone, right? I don't need Big Brother watching me, watching my every move. If they get control of your finances, they could literally, I mean, like, yeah, they could literally stop you from buying anything until you comply with their wishes. Do what we say, or your money is frozen. Which they could do that now, but it would take a court order. With CBDCs, it wouldn't. Plenty of people in the Asian Pacific zone will be buying Bitcoin. Of course, that's a bullish factor. In I read something today. I can't remember where it was. Oh, where was it? I read something that 400 companies, 400 small companies, or small businesses is what it said, are now taking Bitcoin as payment for services, but I can't remember where that was. I probably won't be able to find it. Dear Gary Gensler, are you investigating U.S. Senator Warren? She makes 285,000 a year, and she has a net worth of 67 mil. That's nice. That's nice. Where's the rest of your money coming from? Right here. 400 plus small businesses in the Philippines. I was wanting to say Panama. Philippines are now accepting Bitcoin payments. That's not huge news, but it's good news, right? I mean, you would need a lot more better news than that. Bitcoin, it looks like it's struggling here. And you did just close that higher 15-minute candle. So we could potentially take a position here and you risk the high of day. Let's see if we can get a 5-minute pop first. I don't like to buy on down moves. Let's see if we can get it up to 26,000 even. So I'm gonna set a limit sell at 26K. And I'm gonna risk the high of day. Just over it. Limit 26K. Do that with a sell position. So we'll see if we get filled. Because we did just close higher on this candle. You can see how these two candles close the same and then boom, higher close. You could get an engulfing move now. 30-minute still has 10 minutes left on the closure, and we still got 10 minutes left on the closure of the hourly. So not seeing a whole lot of volume come in here, though. I would like to see that, right? Like just see this thing start to move out. So you're gonna probably hit 26K on Coinbase. You're $5 away from it. But on Bitget, it's above the closures. So there was a 26K hit there. But I still didn't get filled on Bitget. Up you go. Go on. All right. There it is. That was the entry. Let's see if I can get it up to 26. 26,110 maybe. What is this? 26,119 is close to the high of day. So the short order was filled. I mean, with this structure right here, it would look like you're going to get that high of day. But you never know. Are you sure they are trying to ban it or are they trying to regulate it? I don't know what they're trying to do. I know they're suing them. That's what we know, right? They're suing the exchanges. And the guy that, I mean, there's video out there of him basically saying 75% of cryptos are not securities, and he has taken a complete and totally opposite position, right? Why would he do that? Why would he say one thing? Oh, what did I do? Oh, come on. All right, let me see here. I hit the wrong thing. Not that one. This one. Why have you changed your mind, Mr. Gary Gensler? Why? Is this why? Maybe, right? Maybe. When he was a teacher in MIT, I'm sure you guys have seen that video. It's been all over the whole internet a million times. Yeah. So where he was pro crypto with this new administration, he is not. It's funny how that goes. Um, we're still kind of waiting. I mean, to see what happens here. If this dumps out here and like takes out the last 15-minute candles open, I think you would probably see it continue to go lower. Right? If it closes higher, then you're probably taking out that high of day. But on my entry is literally like, as far as what it looks like on the candlesticks. Let me get back to the 5-minute chart because the prices are different on the exchange. My entry was filled on this candle, like right there, roughly. So the high of day is just right there. And I don't have a bunch of leverage on it. So I could even kind of let it go. Like if it wants to snipe that high of day and then come back lower, and I'll see what happens with it. But it's such a volatile, like yesterday was so volatile. It's yeah, technical analysis doesn't really work so great on stuff like that. But yeah, I got you, sloth bag. I understand that there are still, as of right now, there are still on off ramps for sure. I'm not really into politics, so I don't know what it means fundamentally for the asset. But I do want you guys to definitely, you know, not lose a lot of money. That's the whole goal of the channel is to help you identify higher probable areas, higher probable times to look for entries, what to do, what not to do, right? Things like that to kind of help you make better trading decisions. Because it's not about knowing what the market's going to do, it's about probabilities. That if you use these rules over time, you will make money. Let's see what Euro USD is doing. I mean, Euro JPY. We'll look at it down here. You know what? Let's leave the dollar up. Let's look at it over here. It's still not folding. Still pushing up. And everything still looks the same. JPY is a little bit stronger than Euro, so it should go down, but it's not. Maybe it will now. Aussie, New Zealand is just getting tore up. Nice 3 weeks of upness. What do we want down here? What's going on? Why is this thing getting a spike at 10 o'clock? What's the market looks like now? Now some of tech is green. So this stuff, not these three, but we got Google and Meta. AMD is up. Baidu is up. Bank of America is up. Wells Fargo is up. Citigroup is up. American Express is up. So like McDonald's down, Starbucks down. Let's look at the sectors. So like if we get more days like this, the market's going to continue to go up. The bears are going to be wrong. Their best case scenario for a bear market to come back in play on this asset is the fact that tech was leading the rally. But if you get all of these sectors coming back, right? Like money is starting to roll into all of these sectors, that will literally push this market up. What's down? Consumer staples. Let's go to the daily. Consumer staples is down. Healthcare is down. Healthcare is almost an engulfing. Not quite. It didn't take out yesterday's high, but it came close. And utilities are down. XLK Tech, I mean, it's barely down. This says it's down, but it's not below the open, so it isn't down. It's up. The candle is green. So that's weird. But communication's good. Energy's good. Discretionary, consumer discretionary is up good. The financial sector is up real good, up over 1%. That's the banks, which you had to known it was going to eventually catch a bid. All right, it had a nice fall, but it's been trading in a range here. If you don't believe the banks are going to be good, if you still believe that the bear market is going to continue, then you're going to be looking to be a seller right there, or roughly in that area. You don't want to sell it on the first tag of monthly resistance. So you would wait for it to do something like this, right? But you're above this previous swing high, and this was a higher low than this low, so it's your first kind of sort of higher low, higher high. But truthfully, if you believe the banking sector is done, then you're going to be watching monthly resistance on 33.77. And then this is for real estate. It's in a similar type of, resistance or range. That would ultimately be resistance, but it could find resistance here as well. You got a daily res up there in the middle. So it's got to break out above all that stuff and have bullish continuation. You can't just break out. It's got to have continuation. It's got to have momentum to the upside. Bitcoin still sliding sideways at the highs of day. We're trying to see if it's going to roll over here because we did take a short position, or I took a short position at 26K. But today could end up being sideways. So you want to take profit at daily support. Are you sure they are trying to... Oh, I read that. Can you please take a look at ZL for a medium-term long, looking at daily support now that it's showing strength? ZL. Soybean futures, 49.26 daily support. So you're talking about this daily support here for a medium term long. Well, you're getting ready to you're buying kind of high in the monthly range. And you can see the clear monthly trend. So when you say medium term range, I'm expecting you're looking to hold it for more than a few days. You should have bought it down there at support on the monthly open. But the fact that the monthly open just happened 6 days ago and you're up, pretty good, you're getting ready to come into an area of potential resistance being last month's open. It doesn't mean it will hold, right? Because it's not a resistance level. It's just last month's open. But those areas can act as resistance. For instance, that month open, you didn't get all the way up to it. But here, look at this monthly candle with this monthly open. See that? So you open, trade up to there, and then ultimately that is where you broke down. Right? So that would have been the short entry. So what I'm trying to say is, yeah, daily support is there, but you have to be aware of your higher time frame too. That's also going to be a weekly demand or supply zone, potentially. Like I said, doesn't mean it will be. No, it's just a potential area to watch for resistance. So you're kind of buying it pretty close to there. But here's the thing. If you get a retest of this price tomorrow and then it bounces and you go higher, then yeah, you could potentially buy it there and then look to take profits here. It's all going to amount on today's close because you got a daily resistance right there. All right. It was retested there, had a down move, liquidated the low. So you probably might, you're right. You do have some momentum starting to the upside here. So yeah, technically that's probably where you could potentially look for entry. And you would definitely want to be scaling out at 51.62. At least take some profits there because price could literally turn around there. Not many retail traders are looking at higher time frame charts. You can barely get them to look at hourly charts for support and resistance levels, right? And sometimes they're literally buying, like coming into an area that could literally be resistance, like where you would want to short. Since the monthly has opened, then for 6 days you've gotten some bullish momentum. This could be a fake out move, right? It could be a fake out move. You could be looking to be a seller because you're getting monthly downside continuation. However, that downside monthly continuation is getting extended. It's not overbought yet or oversold yet, but to get oversold on a monthly, you need to see some like real massive ranges, like big ranges to get to be oversold on a monthly time frame. But in my opinion, my honest outlook on this would be I would probably be more of a seller around $51 if $51.62 holds as resistance. I would probably be looking to sell like a liquidity run above what a daily high or something up there because you didn't take out last month's low, right? If you would have taken out last month's low and then started to get some bullish momentum like that, but you did take out a daily low, a daily swing low. So you did take out this swing low. Okay, so that's why you didn't take out. You took out this swing low on the last day of May. That's why the monthly open is right there. So for the last 4 days you've been going up on the month. But just kind of looking how everything looks, I would probably be more prone to sell that than buy it. But you are above the daily 21, so if it can hold daily support, bro, yes. All right. I'll say that. If it can hold daily support, and that means on a daily closing basis, if it can hold it, then yeah, and I would look to take profits there if you're looking for a longer term trade. I always take a big position and then exit 70% of that position intraday. That way, if I do end up catching a trend, I still have 30% of the position open with leverage. So ultimately, if you catch a trend, it would be like taking a swing trade with a wider stop, basically, is the way it amounts to. So we haven't quite got that high, but you can see how your 15-minute candles are still closing higher. So like I said, it does look like it's trying to take out that high of day. And that doesn't mean it'll go lower there either, guys. I can't predict what price will do. But it is an area, since you had this yesterday, and some random upside violence for no reason at all. So we'll see how it ends up. But yeah, that's my outlook on soybean futures or soybean oil futures. The way that I trade, the way that I analyze price works for every market, every single market, because candles are human sentiment, right? It's human sentiment. That's why it works. Same here. Took a short at 26.030. Now, I don't know what kind of leverage you got, Mr. Smith, but I said that I took it with a small position and light leverage so that way I could set in a pretty big wick above, right? I don't have my stop setting just right there. I actually don't physically have a stop in the market. So if it does go up there and then come back down, that would be ideal. But the thing of it is it could absolutely roll over right now, right? It doesn't have to take out the high of day because this was the point of control. So this spike could literally have been just stops, like that many stops being taken out. Both to the downside and to the upside. That's why you don't like kind of ever want to look to take early positions, especially this is daily support right here, this white line. These are the type of days that literally are just, you took out yesterday's low, so you go up, set a high of day, mess around it for a little while, take it out, and then for the rest of the day, slowly trade down. Boom, hit daily support, take profits. If that's the way it plays out. And that's a big if. So probably getting a stop above at least 26,200 would be ideal. If you entered at 2640, that makes daily support a 2-to-1 risk to reward. I'll be able to get it exact. 26,030. Let's leave it there and then just a 1.5. But like I said, it doesn't mean it will. I mean, you can't predict what price will do, so. But that's kind of what we're looking at here. If it plays out. All right. Johan is late. Drop down, give me 50 push-ups for being late. The dollar had some amazing strength, basically running up to yesterday's high and then rolling over. It'll probably, I'm assuming, find support soon and make a fresh high. You've already liquidated that high on the Euro USD. Like I said, I got stopped out on that Euro USD position. See? Took out yesterday's high and now you're bouncing. There's going to be a lot of games played right around this area. Lots of games. But ultimately, we are watching to see if this does end up holding support, and it could be on a higher time frame thing, right? You've already broken it to the downside on the weekly, but that weekly support is, if it holds good, The longer it holds, the better. And then the monthly is obviously a little bit lower. So you could potentially take out last month's low and then bounce back above. And that's only if we get a trend reversal on it. You can see last month was a down month. And the trend reversal I'm talking about is last month. Because I think with that COT data spread, we're probably going to see a big trend start soon. And it could have already started down here, right? This could simply be a pullback. We shall see. That's going to be 2022's yearly open. And up here's 2021's yearly open. So for a couple years, you were trending lower. This year, you could trade sideways for the whole freaking year. And then 2024, go. Right? We'll see. Only time will tell. But that's currently what I'm hoping for anyways. Because I am short this asset up here. So we've kind of pulled back a little bit deeper than I wanted it to. But hopefully it starts to fall again. If that does happen, I will close most of the position out at 123 because that's Barclays' estimate. Their estimates don't mean jack, though, because they can change their mind next month. It's all based on if the BOJ starts tightening their interest rate or tightening their monetary policy. And the reason for that is based on the Nikkei 225 because it's up nicely. So they could start tightening their monetary policy. And in the euro still has to tighten their monetary policy because they're still above 6% on inflation. And if the US stops its tightening of monetary policy. So it's based on a lot of things kind of have to happen for that to play out. The Eurozone has to continue to do interest rate hikes, and the BOJ has to start doing interest rate hikes, and the USD's got to stop doing interest rate hikes in order for that to work. But it was a fantastic trade. Like I said, I made more money on that trade than most Americans make in a year. I don't even have to trade FX anymore because that was a big move. You're looking at a lot of pippage there to the lows, 2,400 pips. That's crazy. Crazy, man. And that happened in 3 months. Sideways for 5 months. Down. That's what I'm hoping anyways. That's all the data I got on this exchange. But I'm pretty sure that's not an all-time high. Pretty sure. Let's see if we can find more data on FXCM. Yeah. Not an all-time high. See, FXCM has more data. But that was a good liquidation zone point, if you will. Come on, man. Just roll over so we can end this damn stream. We're probably going to end it anyways here because there's not a lot of questions happening. I quickly took the short trade. Yep, we're just looking for it to get to there. That's it. or take profits there if it gets there. If you get above the daily high and you continue higher, then just eat the stop. It was a hell of an effort. No one will blame you. I mean, you got quite a bit more volume up here now than you had earlier, so it does look good. All right. Since there isn't any more questions, did I look at pound dollar? Nope. All right, let's look at that. Yeah, as long as the questions come, I'll stay live. I ain't got nothing else to do. Great British Pound versus the USD. Oh, and yeah. So I took a short trade on this. Even though it's up on the year, even though it's kind of in an uptrend, the reason I took this short on it up here was because I was just kind of like hedging off the USD JPY short trade, right? Because I'm losing realized P&L on that position as the USD maintains its strength. So if the USD is going to maintain its strength, I took the short trade right there at 126110. If the USD maintains its strength, then this should ultimately go lower, correct? So that would offset the losses on the unrealized P&L on the USD JPY. So I do have a near time short side bias on it, but that's only as long as the USD continues its strength. Okay? So here's the monthly chart. I mean, last month you tested the April's open and you bounced, right? Tested April's open and you bounced, closed, and then on this you pushed up. Ultimately, that was where I took the short, and we're kind of still sitting in this range here. So I guess if you have a short side dollar bias, if you think the USD is going to roll over, then the pound is going to continue to be strong, then you would want to watch this price here. Next price, that price is 1.23304 on the Oanda exchange. And then the next area of potential support obviously would be the yearly opening, and that is at 1.20978. So we're starting to see those SPY gains get taken out here with a little bit of volatility, which is what we were expecting. We are expecting a pullback because these things got, not so much this one, but the USD 100 did get to the overbought area. This one, not quite. Not quite. Also, there's clearly resistance here. But I mean, the way it looks, I would say, I mean, it doesn't have to, but if I was going to be the one directing what price would do, I would run price up above this swing high right here, then roll it over, right? That makes more sense because you're liquidating a massive swing high that was put in back in August 2022. Liquidate that and then go lower. But you broke out of a pretty big range here with this candle, and it's been up ever since. So that's upside confluence or upside momentum. It's just not, the candles aren't big, so it's not a lot of momentum. It's slow. But if the rest of the markets stay green, like the rest of sectors, if if more than half the sectors are stay green from here on out, that will push the market higher. It will. So the market's rally so far has been blamed on tech and tech alone, from AI alone, because literally everybody in the world is still bearish based on a lot of data sets. I'm not bearish because I follow price. I do what price says, and price said at the beginning of the year it was going to be bullish. So we've been bullish since the beginning of the year. But I also believe that, the 2-year, 10-year, or 2-year and 10-year inversion is still inverted. And sometimes it can be 6 months to a year after the inversion gets back to neutral or above, then a recession could happen. That could be months from now. But your yield curves are inverted. When your near-term yields are higher than your long-term yields, that is a massive problem. There's no doubt about it. It is a massive problem. And since we've had one of the most aggressive rate hiking cycles in history, not the most aggressive, but one of them, like we've hiked, 10 times since last year, all the way up to 5%. So, yeah. A lot of macroeconomists or economists or whatever are saying that the economy still hasn't really flushed out the high interest rates yet. But we'll get the CPI print on the same day as we get FOMC. And what I would like to see on that is lower, but let's go to the 14th. That's next Wednesday. It's not this Wednesday, but next Wednesday. And let's filter that by just doing 2 and 3 star. So that way it'll help us suss out. Of course, CPI, they don't even have a forecast on it yet. And it's 2 weeks away. They should already have a forecast on this. But see, this doesn't say that you're going to have FOMC. Oh, Tuesday, June 13th. So it's not on the same day. I was lied to. The CPI will be on Tuesday, and then FOMC will be on Wednesday. FOMC is going to be on the 14th. Let's see. So last month it didn't change. That's not the one I want. I want this one. No, this one right here. Oh, they're forecasting it's going to go up. Oh, no, that's the latest release. There still isn't a forecast for it. But I would love to see it lower. Love to see it lower. I'd love to see it drop all the way down to 4. That would be awesome. And if that's if that happens, then they'll stop hiking interest rates more than likely. And we'll see what plays out. We don't want them to stop hiking interest rates because the banks are starting to take a dump. That would be bad, right? We want the jobs market to stay pretty good, and we want inflation to keep going lower. As long as that occurs, then the bears will come around. Not the perma bears, though. The perma bears are always going to be bearish. Hence perma bears. And they're always bearish. You guys need to not be bearish or bullish. Let price be the leader of your decisions, right? Don't listen to other people. Don't take their word for it. Don't look at their graphs because they're just doing it for clicks and engagement. They really don't know what price is going to do. Nobody does. So why rely on data like that? Why not just rely on what price is doing? Because price will let you know. As long as you have a longer term horizon in mind, right? So, like, we wouldn't have been looking for this month to break out. We wouldn't have been expecting June to just open and go, right? We would have expected June's candle to stop there and to potentially trade as low as there. But since this ended up being a bullish engulfing from this month, you're opening up and you're going higher. So even though I am expecting a pullback, this wick up here is still a threat, right? So we only look to trade inside the range price has given us. We don't expect breakdowns or breakouts. We try to nail the trade. Like, for instance, if I thought this was going to be the high of June, which I don't because you're so close to this wick, there's that potential, but it could also be, right? Then I would only be looking for it to go to here, because that's the range the market has given me. And inside of that is where you're going to be making profitable trades. Taking a long trade here and having a profit target up here for no reason is ridiculous. You need to have a reason for it, like data. So I use price data. Price data is the most basic and fundamental data. I can show you over and over and over and over again how literally it works almost all the freaking time. Now, I don't make every one of my trades because sometimes I'm a day late or a day early. I mean, most of the time I'm a day early because I, like most everybody else, lack patience sometimes. Right? So sometimes I'm a day early on my entries and then I get stopped out, and then the next day, poof, there it goes. Right? Sure, it's happened to you guys as well. But you can see clearly how so far you're trading inside of this candle's range, right? And use the high to low also, not just the body. The body is a potential resistance point, but you can definitely get a wick up to there. So like if you were looking to short it, that would have been the best price to short it, given the data you have. But you can like go into the weeklies and get, other resistance levels. So the weekly resistance level put in there was actually better than the monthly resistance level. So you could have like honed in on that entry, so to speak. See? So like if you were shorting based off the weekly, but keeping the monthly in mind, right, would have gave you a better entry, a higher entry. Well, see, I took it based off the daily. See where this is? That's weekly resistance, right? I knew it was. So what I did was I took an intraday trade based off of that bearish candle right there. So my entry on the short is literally right under that white line. And that was done intraday. Right here. On some news. Right there. So as this hourly candle was driving up, 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 I hit the sell button. Stop was up here. Just above this swing high. because I knew this was weekly resistance and I knew this was old daily support, and I knew the day before we had broken down. Or not the day before, but that previous day we had broken down, right? A short entry this wick, and you can see how it played out like almost instantly. Next hour, and then boom, down. Sat in it through this, boom, down. So I'm still sitting in it. We'll see how it plays out. But I just used the data the price gave me. No, I haven't talked about the DXY other than it's being bullish. I hate it. And it's only because of how I'm positioned, right? It looks like it's failing. It does. All right, so let's get rid of all this horse nonsense right here. Let's go straight out. So here we are. This is the range we've been trading in since the open. The yearly open. You traded down, then you had a bullish engulfing, then for 2 months you traded back down. But notice the range. Once support was set here, and now resistance is set there. We can go in tighter. Here is the weekly. So it's like the lows 3 weeks right there is literally been bullish as hell. But here you are, unable to tag resistance so far. There's weekly res there. So these two white lines are going to be very important. Weekly resistance is also daily resistance. So earlier today, we were trading up here. It looked like it was going to go break out, but it didn't. It didn't. So where today closes will be important. We already had a nice stab higher, but it couldn't get there. And then you had almost an instant bearish reaction right here. So this level has to hold. If you get a daily open or a daily close above it, then this is the area that I'd be looking for potential shorts. If this level holds, then not today, but tomorrow, because it'll probably chop around sideways inside of this daily range for the rest of the day. And then let's say it closes right here, right? Or something. Tomorrow, I'd be looking for a tag of that. And then I'd hit that with a sell. Boom. But that is against the trend. The trend is currently up. The last 4 weeks, like this is the entirety of last week's range. These 2 days, boom, boom. Like that's the entirety of the weekly range. See that? It's nothing. Right? So you did take out this candle's high, but you closed below it. And notice how you didn't go lower than that. You stayed inside of basically that weekly candle, but you had to wait for price to get back down under it before you could make an assessment or even a judgment. So it is Tuesday. We could be looking for this to be the weekly high. That is, of course, only if daily support hold or daily resistance holds. You close above daily resistance, it's going to probably test 104.95. But if this price holds, then I could definitely look for shorts coming back in here or sellers to show up one way or the other. I would say most of the bidding come from the fact that this was a descending wedge, and Forex traders, unfortunately, they are a lot of pattern traders in Forex. A lot of them. Right? A lot of them. So once you broke out here, people just started adding on because you were in a descending wedge. If you put this line down here, you can see what I'm talking about, right? Descending wedge coming down. Now, the problem is since we have had these 3 weeks of bullishness, it's hard pressed for me to think that it's going to break down. Because typically, whichever direction you're going, once you get in the range, that's the way you break down. But, yeah. So, on the yearly, you're up just a little bit. So, this looks weak to me. You were down on the year for most of the year. You were up here, and in fact, that's your yearly high right there. And then this candle is your yearly low right there. So that's the extent of the yearly range. Here's the open, there's the high, there's the low, here you are. So if I pull up the yearly chart, this is what it looks like. Let's get rid of the green thing there. That's your yearly chart, right? We are 6 months into this yearly range. So people could be buying it based solely on the fact that they're afraid that, there is going to be a recession. Then people will buy it as a hedge, as a risk-off thing. But to me, it doesn't look strong. Last year was a big candle, big range. This year so far, tiny, tiny, tiny. And if you get under that yearly open again, I would almost assume that we would probably see a fresh yearly low put in. So there's a lot that I can say on the dollar. And to me, it's going to hedge on this area here. If you start to break out, you're probably going to get bullish continuation because a lot of people are trying to short here, obviously. People taking profits, selling, or just straight people taking shorts. But, that's that. If we break out and close above that, hypothetically, 104.954 is the next area. And that's going to be monthly res. But technically, you could just take out last month's high and then roll back over too. But I like the way it looks, kind of. First few days of the month was bearish, and that's it. We're just too early into June to make a decision whether or not we think the high of the month or the low of the month is in. I can tell you that I do not like the fact that it bounced so quickly from that yearly open, but that's where people are going to buy it. That's why you just traded back down to it and people bought it. Sure, why not? You're trading above the yearly open. It's a decent trade, right? You're betting that the year is going to close higher. If you think the year is going to close lower, which I'm of that camp, then we're going to look for resistance eventually. Hopefully soon. And the way we're going to trade that is we're going to trade it on the euro because the euro has the highest weighting. The euro has the highest weighting in the dollar. That looks bad, but you could see a bullish monthly engulfing too, right? Doesn't look like it yet. So maybe we take out last month's low, and as long as you don't see downside continuation, then it would be good. But as of right now, you would think buyers would be stepping up here because it's the yearly open. And if you fib the range from the yearly opens low to, the yearly low to the yearly high, this is a pretty decent area to be a buyer, right? This whole range. So it's not over yet, but it's not looking great. Can you look at CC for a short? Is that a crypto or is it a stock? CC looks like it's a stock, but it could also be a damn. What is it? Is it the stock, Victor, or is it a crypto? Coca-Cola. Oh, Cocoa Futures. Got you. Well, let me go to the. All right. Cocoa. It's bullish. It's been bullish for 5 months straight. So it could be running out of steam. So you just traded above last month's open and you're finding a bit of resistance. So let's go down into this. Let's go lower. See if we can find some resistance. You got a 2-week resistance right there. Boom shakalaka. Right at last month's high. Beautiful. So beautiful. This looks like it could be a run above the highs, but it can literally find support close. So yeah, this looks to me like, yeah. Depending on where Cocoa Futures closes today, I would be willing to short 30.79, 30.68, or a test of this price right there, 30.56. That depends on how this closes today. If it closes back above this, then obviously that takes that short entry off the table. Because this could just be a profit-taking move based on you got above last month's high. Investors will automatically take profits at those levels. So sometimes you can get a bearish reaction just because of that. But you will also have new people looking to buy based on the trend that it's in. I mean, it's in an uptrend. Running out of steam. I mean, you tagged oversold or overbought right here. So clearly all of this was, but that divergence has played out. So the divergence was made there and then there, right? Because you closed higher. This move down here was that divergence playing out because you tagged the 50. So the divergence play is gone. Yeah, the divergence play is gone. But just from the fact that it's been so bullish for so long could indicate that you might see prices start to roll over here. All right, so if you close under 30.56, watch 30.56 on an intraday basis. If you reject there, that's a good spot to look for a short entry. But you could wick as high as there. All right. I don't think you would. I think if you did get a wick above daily resistance, you would tag that 2-week resistance, and then that would probably be the end of it. We just liquidated the high on Bitcoin, so that's what we've been waiting for. Oh, shit. That's what we've been waiting for right there, baby. There it is. Right there. So let's see if it rolls over. This is where you want to take profits. That price is 25,741 if you were able to get in roughly around 26K. If you haven't taken the trade, you could take the trade now and base your stop right above that wick right there. So if it's going to continue to be bullish, you will get stopped out. But if this was the play and it's going to run back lower for the rest of the day, then it should. All right. Gold on the quarterly is bearish div. Yeah, that's a long term, super long term. Your divergence. Okay, you do have divergence over here too. I was going to say this divergence played out. So that was the high. You can see clearly that's the high on the RSI. Then this high made a lower high. So this move here was that bearish divergence playing out, because look what it did. It boom right to the 50, and that's basically where it ended. And you traded sideways for several quarters, and then you broke back out again to the upside on gold. And here is the first high. This high did close higher, and it did close lower. You are correct. There is bearish divergence on the quarterly. And you are currently trading under, so close to taking that high out, but you didn't get it. So that says monthly res. Let's check it. It is. And you broke out above it. And then you made it a bearish engulfing after it. This is a bull trap on gold. The trade was entry at 1975. That was the entry. Looks like you might get another chance at it. Hang on, let me go down, let me go down, let me go down. Oof. All right, so here's what I think on gold. You might get another test. You might get another test of monthly support. I mean resistance. It keeps you in the weekly range. The daily is hard to read. There's 2 days and 6 hours left on this. So you got a big gap here is what I'm saying. That's the problem with the gold short right now. You have a gap from where you currently traded to today's high to up here. So literally any price from this high to that line could ultimately, you could get a wick to that. So see how today closes. If today closes above 1961, which is yesterday's close, then you're going to have to leave it alone until it makes a resistance. And it could make a resistance higher than where it is now and then ultimately roll down, right? Then you would be waiting on to see if you get, a test of that. Oof. This is only based on the current dollar weakness too. But here's the thing. You're trading in a range. Last month's candle is a very big range. All right. this looks clearer, right? Monthly 2-week support broken, and then you had another 2-week candle of downside. The problem is you liquidated this, so that's why you're getting a bounce right now on gold. So just tighten the range up. Use the 2-week right there. That keeps you in line with last week's range. Literally nothing, dude. Resistance is there for now. For now. I don't like this price action. You see how I did that? How I went all the way down, found the range. Here's the range. Boom, boom. Then we set this at what? Daily res. Yesterday's close. That's what this line is. You're in the middle of the range. Right in here. Ultimately, you could trade up to there, 1968. So this could be a run on stops. So here it is. Like, I know it looks ugly, but I don't know what price is going to do ever. I can only show you the range and the areas to look to operate. So obviously today that would have been the play, and then you would have taken profits on this move lower, and you're reversing on the daily range. Your daily is literally just liquidating highs, made a new low, then it made a fresh low, then it made a fresh high, then it made a fresh low. Wait till tomorrow. Tomorrow will be more clear. All right. Let's get rid of this hourly res because it's already been tested, but you haven't broken above it. So if you get above 1968, then 1977 is the only next area to look for play. It's it. Obviously, you can see the wicks down through them. So it's not as perfect sometimes, but sometimes it is literally a perfect test. So let's see how today closes. I would love to see today close bearish. If today closes bearish, then this would be my area to look for entry. Don't take the short on the first retest of this price. If tomorrow closes bearish, you're going to look for the next day to open, run up, tag that, and then roll over. That's only if you close bearish. If you close bullish, then you have to wait to see what happens up here. And then if you get a daily closure above that, this is the next area. But if it's going to be a short, because like you said, you got quarterly bearish divergence going on. If it's going to be a short, it's going to find resistance pretty soon, probably, because you got a fresh 2-week breakdown here. And then there's a lot of space to cover in this range. So, yeah. That's what I like. That's what I would do with gold. Bitcoin's pushing back up again. So maybe Bitcoin doesn't want to be bearish today. If it doesn't, oh well. Right? We'll try it again tomorrow. But I'm going to end it right there. You guys have a fantastic rest of your day. I'm short gold from 1977. I don't even remember what price. Oh, you're in good shape, bub. You took the short at the 2-week resistance, so I think you're okay. Now that's obviously if you're going to get downside continuation. If you don't get downside continuation, then you're probably going to get stopped out, depending on where your stop is. But if you're short from 1977, Victor, you did it right, bro. You know what I'm saying? You did it right. That's all we can do when analyzing price. We can only look to trade inside the range the market's already given us. This is probably just a bullshit stop run day. Tomorrow we'll probably find resistance, and then the next day you should probably see it roll over. And if it doesn't, then you might want to think about taking profits if you haven't already, because you are still in profits. Not as good as you were in profits, obviously. But that's why I take profits. When I take an entry, I'm looking at it as a day trade only. And then, obviously, like the Bitcoin short, for instance, right? That's where I'm short from, right here. That wick right there. Pushed up, boom, Heath hit the short button. Why? Because it's inside of this freaking range. That's why. And there it is. Here we are, right? Yeah. We don't ever know if we're going to get continuation or not. So as price started pushing lower, I took profits. So that way I'm good. And then I just leave the rest on and I can forget about the trade. If it comes back and stops me out later, oh well, I tried. It was a good try and I got paid. Boom, boom. Done. Right? That's all you can do as a trader. And Bitcoin looks like it's going higher, guys. So, yep. Who knows what it's wanting to do? If it continues to go up, I can definitely see it going all the way up to there. But there's like a lot of nonsense in there for inefficiencies. If you're looking for inefficiencies, probably the midpoint of this candle right here will stop it. This looks like the breakdown city. So, yeah. All right. You guys have a fantastic rest of your day. I will see you Thursday morning. We'll do this again. We'll look for another trade. Hopefully by then we'll have some good news or something. But, yeah, we'll continue to look for opportunities. Let's check the euro yen real quick just to see if it's finding resistance or if it found it. It's looking okay. It might have done it. Might have done it, and it's too late. That would have been the entry right there. Now, that doesn't necessarily mean you're going to win the trade. So if you're watching euro yen and you get a retest of this price, be very careful. Stop would obviously go above this swing high here. But that would have been the opportunity to enter the trade as you did test resistance, right? All right. So if you get another retest of 149.40, 405, potential bearish entry. You guys have a fantastic rest of your day, and we'll see you Thursday. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.